I'm John Jannarone, Editor-in-Chief of IPO Edge here at the New York Stock Exchange the day after the IPO Summit. And I'm in fact here with someone from the exchange, Bonnie Hyun, who's U.S. Head of Capital Markets at the New York Stock Exchange. Bonnie, thanks for joining me and, well, welcoming to your home.
Thanks for having me here. I'm glad you were here for the last couple of days.
Great. So, Bonnie, the theme of the conference yesterday was the gift of time. And for people who can't figure that out, it means, you know, it might be a little while before the IPO window reopens. So what are these private companies doing with this time that they're being gifted to prepare a little bit more?
Yeah, I think that's a very good question. A couple of thoughts here is, first and foremost, there is no rush. I always believe that, you know, you have to be ready to go. And I think a lot of companies are doing that IPO readiness. And that comes in a couple of different forms. First and foremost is making sure that the business is strong and healthy. And, you know, we saw a lot of activity, obviously, in 2021, where we had about 400 IPOs, but those companies were not as prepared as they should be. And I think we're going to see that kind of come back in terms of, you know, whether the IPOs come back in 2023, late 2023 or 2024, but very much well prepared, companies that understand their financial profiles, and lastly, making sure that they can communicate that story ahead of time to potential investors as well.
I got you. So is it fair to say there might have been companies that didn't take enough time before going public? I mean, that does happen sometimes, right?
Yeah, again, I think about 2021 as an anomaly where you had, you know, multiple IPOs go out on a single day, and there was just a lot of capital around and people willing to put money there.
Yeah.
And so in that sense, it created an environment that allowed for, again, companies that were pre-revenue, for instance, to be public, which was not seen for a really long time, or since the dot-com era.
Yeah.
But now I think, again, there's rationalization of capital. There's also sort of a return to fundamentals, and also a focus on balance sheet. So I think all those are really driving businesses and companies to be much more conservative and yet very much more disciplined as they think about really thinking about their businesses being there 5 years, 10 years. In the case of yesterday, where we had FedEx celebrate their 50-year anniversary, really building those longer-term companies that are here to stay.
Great. Now, without getting into too many specifics, what are some of the characteristics I should expect to see in companies that do go public as the window opens? I would imagine mature companies, profitable companies. Am I on the right track?
Yeah, I think that, again, back in a couple of years ago, there was a notion of growth at all costs. And I think that that's been a little bit more lesson in terms of a combination of being able to grow, which there is obviously a premium and valuation for high growth companies, but really able to kind of have a path to profitability. And I think that's what investors will be looking for, is ability to scale, proven scale, but also a financial discipline to say that they're going to be able to grow in a profitable manner, whether it's 12, 24 months out there.
Gotcha, makes sense. Now, I want to talk for a minute about some of the choices that companies have when they want to go public. So of course, there's a regular way IPO, but there's also direct listings and of course SPACs, which we all know a lot about, and those were very, very popular. What does the future look like? Are we going to see a mix of them going forward? My guess is that, and when we're talking just now in the green room here, is that we're never going to see SPACs go as crazy as they did before, but there's still perhaps a role for them.
Absolutely, and I'll talk about that product first, just because that's been so top of mind up until the recent 12 months or so. SPACs definitely have a role, but they had an outsized role back when there was just a lot, going back to kind of a lot of capital out there for people to think of creative investment vehicles, of which SPAC is. I do think there's going to be a resumption of where we have traditional IPOs, which is where you hire an underwriter and you go through a roadshow process to raise capital to go fund and continue to build their business, for acquisition currency, to create opportunities for retention and recruitment of employees. Now, I've also seen, amazingly enough, really innovation that has happened in the capital markets over the last 4 years, starting with us pioneering the direct listing with Spotify, which led to a bunch of different other deals, including Slack and Roblox. But again, those were done for the purposes of what mattered to them, which was to provide liquidity for their existing shareholders, for their employees, versus raising capital. So again, the thing I'm most excited about when the markets return is that there is choice. And there's choice for these issuers based off of what is important to them from a capital markets goals and objective.
Great answer, Bonnie. Now, tell me, in your opinion, what is really required for the market to thaw and come back to life? I mean, I guess less volatility, perhaps less uncertainty around the economy. I mean, is it a lot of those macro factors?
Absolutely. I think when I did this in last year, the IPO summit, we talked a lot about the Ukraine crisis. We talked about inflation, and we talked about the uncertainty of, and obviously the performance of some of the class of 2021. Good news is some of those things are behind us now. I do think that we're getting a little bit better handle on inflation. Of course, there's still geopolitical factors, including some of the foreign relations that we're trying to get our arms around. But I also think that from a macroeconomic perspective, I think there is some light at the end of the tunnel. I'm very much confident that the worst of the banking crisis that we started to have with the collapse of Silicon Valley Bank is hopefully behind us, and now things have stabilized. So that obviously is going to be very important. So again, overall stability, consistency in performance of the existing public companies, and also I think that will help with increasing or providing confidence to investors to take a little bit more risk in new issuances, which is what's going to drive the IPO market.
All right, great. Well, Bonnie, I think that captures it perfectly well. Thank you so much for having us here at the New York Stock Exchange. That's Bonnie Hyun, who's U.S. Head of Capital Markets, New York Stock Exchange. I'm Jannarone signing off from IPO Edge.